last week, we started explaining what public sector is. We differentiate, we did the differentiation, we analyzed the differentiation and similarities between public sector and private sector. We also talked about other sector in the public sector, which is into profit making, which they consider or they call them the government business entities. We looked at its characteristics. We also looked at the various conceptual framework in the public sector, that is a general purpose financial statement or financial reporting standards. We looked at it, and we also tried to look at the measurement model and other stuff. Today, the conceptual framework has been done. It gave us the various the guidelines in preparation of these public sector accounts. Preparation of public sector accounts. Now, we are going to look at those people who regulate the public sector accounting in Ghana. So we have learned about the conceptual framework, which gives us the guidelines in the preparation of public sector accounting. Now we are looking at those people who are responsible in regulating the public sector accounting. That is what we'll be doing today, which is under Unit 1, Section 6. So as I said, the accounting is the accountancy is similar to other disciplines where they have regulators that are designed, or the regulator designed to ensure that maintenance of the standard and the conformity of generally accepted accounting standards. So these people will just be there. They will ensure that the accounting standards or the public sector accounting standards are practiced well, and they will also be responsible in developing the various standards, in analyzing, in reporting these public sector transactions. So when it comes to Ghana, a number of laws regulate the control of government funds, keeping the financial records and preparation of the financial statements for government. And when it comes to Ghana, what do we usually base on in the preparation of these public sector? The first one that you have to consider is the 1992 Constitution of the Republic of Ghana. That is the main laws in Ghana. So that 1992 Constitution, that is the main laws that we use when it comes to preparation of, or the regulators of the financial statement in relation to public sector. We also have the Public Financial Management Act 2016, the Act 921. We have the Financial Administration Regulation 2004, the LI 1802. We have the Local Government Act 2016, Act 936. We have Internal Audit Agency Act. We have the Audit Service Act. We have the Public Procurement Amendment Act, Act 914. We have the Local Government Financial Memorandum. So these are the main laws and regulations that governs in the preparation of the public sector accounting. The country has also adopted the International Accounting Standard, International Public Sector Accounting Standard, that is the IPSAS. and therefore is bounded by its provisions. So the IPSAS is like the IFRS is that you learned when you were in level 200, the accounting standards. When it comes to public sector accounting, instead of you using the IASs and the IFRSs, here you are going to use the IPSAS as a basis of treating your various accounting standards. It is expected that the relevant provisions in these regulations will be followed by government accountants when treating related transactions. Now, let's look at some of the relevant provisions. So, all the regulatory acts, the acts that I mentioned here, we are going to look at the section of it that we will need in the preparation of this public sector accounting. So, when you take the 1992 Constitution, the part that we are going to be interested in is the chapter 13 of the Constitution of the Republic of Ghana. And this side deals in the finances of the state. It deals in the finances of the state, and particularly the articles 174 to 189 of the highest law, that is the Constitution. It usually outlines how government funds are raised, kept, controlled, and spent, and the offices entrusted with these responsibilities. So when you take the Constitution, the 1992 Constitution, chapter 3, where we have the article 174 to 189, it stipulates or it tells us how the funds, government funds, must be kept, how it must be raised, how it must be controlled, and how it must be spent. And also the offices that we have entrusted these responsibilities, the offices that are responsible in managing this. That is what the Constitution gives us. And when it comes to that article, the article covers the public funds. It also gives us the accounting responsibilities of the Bank of Ghana and the Governor of Bank, the Auditor General and his responsibility and the audit services. Now, when you go to the 174, the 1992, it talks about the public funds also. Under the public funds, it says taxation. In Article 174, taxes can only be imposed on the citizenry under the Act of Parliament. So when it comes to taxes, the Minister of Finance is supposed to design any tax that he thinks will be helpful in the country's finances. So he will design it in the form of budget. He goes to the Parliament House, he reads the budget to the Parliament. If they approve it, then it becomes part of us. During the e-levy, the then Minister of Finance presented the budget at the Parliament. They debated over it, approved. As soon as it was approved, it became a law. It became a tax law. And after approval from the Parliament, they sought the appropriate authority in order to waive some of the payment of the taxes. But Parliament may waive this right by resolution supported by 2/3 majority. So when they present the taxes, they can also present those people that they feel or think that he is supposed to waive, those who don't need to pay the tax. When it comes to the Article 175, it identifies the public funds. So when you come to Ghana, when you read Article 175, it will tell you the number of public funds that we have in Ghana. And when you go there, it gives us 3 main public funds. The first one is a consolidated fund, and this consolidated fund is a fund that all monies will go into, and all expenses are to come from it. So the public funds includes the consolidated fund. We have the contingency fund, which is the second fund. The contingency, as the name implies, contingency. So usually, anytime there is any contingency, like maybe COVID came and we want an urgent funds to go into, you go to the contingency funds to take money from it. Then we have any other fund. That is the third one. Any other fund as may be established by or under the authority of the Act of Parliament. So at this, the other funds can be any funds that that Parliament will feel that, oh, this is okay for us to do, and they want to establish. So for example, during Muhammad's time, Muhammad's first term, he established a fund that we call the Stabilization Fund. He also had a fund that they call Heritage Fund. The Heritage Fund was the fund that they had the so according to the Article 175, we have three funds. We have the Consolidated Fund, Contingency, and any other fund. So the any other fund that Act of Parliament may think that it's advisable for them to have. I said previous administration during Muhammad's time, he established the fund that they call the Stabilization Fund and the Heritage Fund. The Heritage Fund came in when we started discovering this oil. And we realized that since these oils that we are doing are not renewable, we knew that at a point, the oil will be no more. So the Heritage Fund was established to keep funds at a point where the oils are not there. With that money, that fund will assist future generation. That is the generation that will come when the oil is finished. That fund is going to assist them. So that was the Heritage Fund that we had. Those funds are part of the other funds that the Act is saying. Some funds were also established when they go for loan. Mahama also established such fund. When they go for loan, they will open what they call the sinking funds, where they will be putting in money there so that when the loan matures, the sinking fund will also be matured. Then they take the money from the sinking fund to go and pay off the loan that they went for. So those were also funds that Act of Parliament, that the Parliament realized that is going to help the country. That is why they established such fund. So basically, there are three funds. We have the Consolidated, the Contingency, in any other fund that the Act of Parliament will deem right. So the Consolidated Fund, as I explained, is used to describe the main and most important government bank account. It is used to receive all government revenues. Example, from income tax, value-added tax, national health insurance levy, etc., including any other monies raised or received in trust for the government, but excluding funds established for a specific purpose or used to defray the expenses of the government department raised or collected. It is also used to pay all government expenses. That is what the fund does. As it receives all funds, it's also all payments or expenses is also taken from the fund. The central bank maintains this account. That is the Consolidated Fund. All payments out of the Consolidated Fund must be approved by Parliament. The Minister of Finance or Central Bank can't just go in there to take money. But all the money that comes from it are all payments out of, they are all payments that pay out of the Consolidated Fund. And before you can do that, you must send the Minister of Finance must send it to Parliament that they want to withdraw money from the account. And it has to be approved. Thus, these payments are backed by budgets prepared and laid before Parliament on behalf of the President by the Minister of Finance and duly approved. In effect, payments from the Consolidated Fund shall be supported by the Appropriation Act. So Appropriation Act is the act, or they will send the appropriation bill to Parliament. When it is approved, it becomes an Appropriation Act. Then we have Parliament approved supplementary estimates. So sometimes they will prepare budget. The Minister of Finance will prepare its budget, but it will get to a point you realize that how the actual expenses are coming, the budget that they set will not be enough So they have to send a supplementary budget to Parliament for Parliament approval. Rules and regulations of Parliament in respect to trust money. So that is what the Consolidated Fund does. Now, on the other hand, the contingency fund is a fund in which funds have been voted, that is, they set aside by Parliament to pay for unexpected events which no other provision exists, for which the nation must respond to restore normalcy. So that is what I used to explain that. For instance, when COVID came, they needed to rely on the contingency fund since there was no depression, there was no funds that were voted to take care of COVID during the 2019 budget. It just came in. So they needed to rely on the contingency fund in order to clear this unprepared or unexpected event. For instance, Ghana had to respond to the May 9th stadium disaster and the June 3rd Accra Circle flooding and fire disaster. So we realized that all these were not prepared for in scheme, so they needed to go into the contingency fund to clear it. This money will normally come from the contingency fund, even though payments from the contingency fund requires only the approval of the Finance Committee of Parliament. The funds needs to be reimbursed from the consolidated fund for money spent on contingency fund, and such reimbursements need parliamentary approval. So here, after they've taken the money from the funds, from the contingency fund, the Minister of Finance will then send it to Parliament for Parliament to approve that the monies that we're taking from the contingency fund must reimburse it from the consolidated fund. So consolidated fund, we take money from the consolidated fund to reimburse the contingency fund for all the monies that we use to cater for the unexpected events. An appropriation bill should accompany the main estimate as well as the supplementary estimates of revenue, which is to be prepared and laid before Parliament by the President. So, as I said, when you want to spend from it, you have to send appropriation bill to Parliament. When they approve, it becomes an appropriation act. The main estimate should be laid before Parliament at least 1 month. The main estimate should be laid before Parliament at least 1 month before the beginning of the year in which it relates. The appropriation bill, when passed by Parliament, becomes the Appropriation Act, authorizing payments from the consolidated funds. That is, the Appropriation Act is an act of Parliament which allows withdrawals to be made out of the consolidated fund for government to meet its financial obligations. So that is what it's about. And when it comes to in December 2015, the Parliament of Ghana approved an amount of this from the consolidated fund for government businesses in 2016. But in July 2016, the Minister of Finance requested Parliament to approve an amount of this as supplementary estimates for 2016 financial year. The same thing applied in 2017, where the passage of an appropriation bill delays, the President, by a resolution approved by Parliament, authorized withdrawal from the consolidated fund for a period not exceeding 3 months into the actual financial year. So sometimes they will send the appropriation bill to Parliament 1 month before, and there will be some delays. The delay that it causes is usually maybe Parliament is on break, or maybe they are not meeting, or kind of. When the government realizes that it's delaying, he can issue a resolution that's spent from the consolidated fund, but this resolution has to be also approved by Parliament. So when we look at table 1.3, it gives us some of the appropriation bills that we did during 2018. So that is what you need from the 1992 Constitution that is stipulating or telling us the funds that we have, the three funds that we have: consolidated fund, contingency fund, and other funds that Act of Parliament or the Parliament would deem fit to establish. Now, the Bank of Ghana Article 183 also has given the following functions to Bank of Ghana in relation to public funds. So, the Bank of Ghana is responsible for the following. It must be the Central Bank of Ghana and only authority to issue currencies of Ghana. Issue currencies of Ghana. They have to promote and maintain stability of the currency of Ghana. And they have to also be the sole custodian of state funds, both in and outside Ghana, but may delegate this function appropriately. They encourage and promote economic development and the efficient utilization of resources. So these are the main function of BOG in relation to the public fund or public sector accounting. The governor, that is the governor of BOG, shall not allow any transaction or transfer of foreign exchange which is against the law. The Finance Committee of Parliament shall monitor the foreign exchange transaction of BOG. Meanwhile, the Auditor General shall audit the foreign exchange receipts and payments or transfer of BOG and submit its report to Parliament. So there is like check and balances. BOG has to make sure that they don't allow any foreign exchange that is against the law. The Minister of Finance will also, the Finance Committee in Parliament will also monitor the foreign transaction the BOG will do. And even if BOG does the transaction, the Auditor General will also audit the receipts and the payments or the transfers that the BOG has done, and they will submit the reports to Parliament. So there are a lot of check and balances when it comes between the BOG, when it comes between the BOG, the Minister of the Ministry of Finance, as well as the Finance Committee, and also the Auditor General. So this one prevents people from using. Now, when it comes to the Auditor General also, that is the Article 187 of the article of the 1992 Constitution. Section 1 of the 187 also gives the Auditor General some responsibility to deal with. And some of the responsibility includes that the Auditor General is responsible to audit all public accounts in Ghana. They are responsible to audit all public funds in Ghana. They are also responsible to appoint a competent person to assist in auditing the public accounts. The Auditor General will approve forms of presenting public funds. They submit to the Auditor General or the auditor's report to Parliament within 6 months after the end of the immediately preceding year to which audited public accounts relate. So last year's all public funds will be submitted to Parliament. The chance will submit within from now till June, that is after the preceding year. They will send all the auditing reports to them so that Parliament will see where there were misappropriation, where funds were not used efficiently. They will send it to Parliament. Parliament will debate over it. If there is a need to invite the legal side also to come in, they will come in. The Auditor General is also responsible for any special audit engagement of the President. If there is a need for them to audit the public, if there is a need to audit the President, the Auditor General will also be there to also do the audit. Now, let's look at some of the rights and powers of the Auditor General. The Auditor General has the right to assess all books, records, accounts, and documents necessary for public accounts audits. So the Auditor General, he has the right to demand all the books. If you are in the public sector and you use public funds in your operation, the Auditor General has the right to come for the books, the records and accounts, as well as documents that you have used in order to help them in auditing your books or in auditing your accounts. They also have the right to treat or to be treated the same way as justice of a superior court when being removed from office, as enshrined in the Article 146 of the 1992 Constitution. So they are also entitled to all the benefits the justice of a superior court will get when he is removed from office. He has a right to also have a salary and allowances, including a right in respect to leave of absence, retiring award, retiring age, not to be varied to her disadvantage during her tenure of office. He has the power not to be subjected to directions or controls of any other person or authority. He has the power to disallow any item of expenditure which is contrary to law and surcharge the amount of appropriate person. So after they realize that people are not doing the right thing, he has the right to send them to court and surcharge them. That is the amount the appropriate person has. So that is the rights and powers of the Auditor General. Now let's look at the audit of accounts of the Auditor General. That is also stipulated into the article. It's stipulated at the articles 188 and 189 of the Constitution. And for them, the Auditor General's account shall be audited by an auditor appointed by Parliament. So the fact that they are auditing other people doesn't mean that their accounts will be audited also. So Parliament will also appoint someone to audit the accounts of the Auditor General to see whether they are doing the right thing or not. When it comes to the article 188 and 189, it deals with the establishment of the audit service, composition of its board, and the removal of the members of the board. Now, that is what the Constitution have for us, the 1992 Constitution have for us in relation to the public funds management or the public sector accounting. Now, let's look at some of the relevant provisions in the Public Financial Management Act. This act was enacted by Parliament in 2016 and is Act 921. The PFM refers to a set of rules, laws, systems, and processes used by sovereign nation to mobilize revenue, allocate public funds, undertake public spending, and account for funds and audit results. So that is what the Public Financial Management Fund or Act talks about. It says about how to mobilize revenue, allocate these public funds, and take public spending, accounts for the funds, and also you audit for the result. That is what the Act tells us. And usually it encompasses a broader set of functions than financial management, and is commonly conceived as a cycle of 6 phases. That is, has a policy design, it has a budget formulation, it has a budget approval, budget execution, accounting and external audit, and evaluation. So these are the 6 phases of the PFM. A large number of actors engage in this PFM cycle to ensure it operates effectively and transparently whilst preserving accountability. So this is the main purpose, or the main purpose of the Act is to regulate the financial management of public sector within the microeconomic and fiscal framework. So they ensure that the funds in the public is managed properly, and it is managed within a microeconomic and fiscal framework. And the provision in the Public Financial Act, that is Act 27, the Act 2016, that is Act 921, they outline the roles of key officers entrusted with the responsibility of managing public funds. They design of microeconomic and fiscal policies, procedures for budget preparation, approval and management of the contingency fund, cash assets, public funds. So they do all these, and this section we will look at the various roles of the key officers. One of the key officers that you are going to talk about is the responsibility of the Minister of Finance. In taxation, yesterday, I know your lecturer took you through some of the responsibility of the Minister of Finance under your Unit 2. They prepare the annual and supplementary budget estimates and reports for submission to Parliament. They also ensure that they also monitor and assess the implementation of annual budget and ensure the implementation of the fiscal policy of government. So, Minister of Finance, at forcing, this is what he's supposed to do, or this is what he's doing. Manage government property, financial assets, government debts, government guarantees, and other contingent financial liabilities specified under this Act. They also account for public funds through the consolidated public accounts. They lay the annual report of the Auditor General before Parliament. They also supervise the financial operations of a covered entity. And finally, so when you say covered entity, these are what covered entity means. A covered entity in Ghana, it includes the executive, legislative, judiciary, constitutional bodies, ministries, departments, agencies, the public service, autonomous agencies, public funds, state-owned enterprises. These are all covered entities. Covered entities is like the public entities that we have in Ghana. The public service in Ghana also includes the civil service, judicial service, audit service, education service, prison service, parliamentary service, health service, statistical service, national fire service, Ghana Revenue Authority, police service, immigration service, legal service, public corporations other than those set up as commercial venture, that is other than those set as GBE. Public service established by the Constitution, the public service established by the Act of Parliament. The term civil service can refer to either a branch of governmental service in which individuals are employed on the basis of professional merit as proven by competitive examination, or the body of employees in any government agency apart from military, which is a separate extension of any national government. That is what, so we know what covered entity is, what public service is, and also what civil service also means. The final responsibility of the Minister of Finance is to perform any other function assigned to the ministry under this Act. And this might not be limited. So this is another way, another responsibility. Now let's look at some of the powers of the Minister of Finance. Let's look at the powers of the Minister of Finance. In order to discharge the above functions creditably, the minister must have the following powers. He must be able to request a report or any information from any covered entity or any other person receiving grants, advances, loans, guarantees, or indemnities from the government. He must also be in consultation with the public service, commission, and with the approval of cabinet, establish structures or units within the ministry necessary to enable the minister discharge responsibilities under this Act. They must enter into and execute an agreement on behalf of government in relation to matters of the financial nature, and they must give directives and instructions necessary for the implementation of the provisions of this Act. He must delegate any of the responsibilities to the chief director or senior public officer, even though the ultimate responsibility shall rest with the minister. So all these are some of the powers the Minister of Finance will have. Now let's look at the responsibility of the chief director. The chief director, and these are the chief director also advise the minister on economic, budgetary, and financial matters. He also coordinates the preparation of the fiscal strategy documents, budget estimates, and appropriation bills. They promote and enforce the transparency, monitor performance of financial management system. They manage the public funds. So you can choose any four of these responsibilities of the chief director. And when you are being asked at the exam, so you must be able to also give to us. We have the powers of the chief director also, which covers the following: shall have access during working hours to accounting reports, place where public accounting services are carried, place where public accounting reports are kept. They may also issue directives, instructions necessary for effective implementation. So you just have to know the powers of all those people that we have put or we have entrusted the public funds to, their roles as well as the powers that they have and their responsibilities. Controller and Accountant General also has the following, and he has to compile and manage. Yesterday also I think the taxation lecturer also took you through the roles of the Controller Accountant General. So here he compile and manage the accounts prepared in relation to public funds. He issued general instructions to principal spending officer in accordance with this act. Keep render public statements on. So these are things that you can read to. They are very self-explanatory. When it comes to another act, another regulatory, that is the Local Government Act 2016 also, the act gives a backing to the decentralization of the central government system, and it supports the creation and running of metropolitans, municipalities, and district assemblies. So you realize that when you were listing the various regulatory frameworks, that is the laws that governs this. We made mention of the Local Government Act 2016 at 936, and this is what the act does. It just establishes the rules of the municipalities, the metropolitans, as well as the district assemblies. When it comes to the internal internal agencies, I'm coming here. I'm resharing it again.
Yeah.
Please, can you see the screen?
No,
Please, can you see the screen?
no,
No, sir.
no. Yes.
Yes, has come.
Yes, it has come.
Okay, so when it comes to the Internal Audit Agency Act also, this also mandates government institutions to have internal auditors to improve their governance of such institutions. The Audit Service Act 2000 also is also another regulatory framework that is set of rules that is going to guide the operation or the utilization of public funds. The Public Procurement Act, it was amended in 2016. The Act 914 also is another act that will tell us, because usually these public funds, these public sectors, they use public funds in procuring goods and services. So this act will regulate the kind of goods that they can buy, the process that they have to go through when they want to purchase stuffs. You can't just wake up and say that you want to purchase this and this and this and that. You must go through the procurement, the Procurement Act, what it entails, the steps that you have to go through, some of the things that you have to check before you give contract to a supplier. Now, aside all these local laws from the Constitution down to the Procurement Amendment Act, there are international standards that we also follow. And that is the International Public Sector Accounting Standards. And this, it usually improves the transparency and accountability of the public sector entities. The International Public Sector Accounting Standards, formerly the IFAC, the Public Sector Committee, supported by the International Federation of Accountants. You know, these people also are part of those who established the IASs. Issued IPSAS, guidance and other resources for the use for public sector around the world since 1997. The Minister of Finance in 2015 gave a 5-year window starting from 2016 for the gradual implementation of IPSAS. So from 2016, so from 2015 plus 5, we are expecting everyone in the public sector to use the IPSAS in its preparation. When it comes to IPSAS in Ghana, Ghana is at the adoption stage. Preparation are being made to mitigate public sector accounts fully to IPSAS, changing to accounting systems through gaps analysis, training of these public sector accountants. Now, this is the various standards that we have. This is the IPSAS. This is what the name of it. And when it comes to the other accounting standards, you will see them here. So for instance, if you see IPSAS 1, it's considered presentation of financial statements. But this one is usually for IAS 1. Preparation and presentation of financial statements. Even this one is no more existing. They have brought IFRS 18 in place of this, the IAS 1. Then we have IPSAS 2, which talks about cash flow statement. IPSAS 2, it talks about cash flow statement. IAS 7 will take care of the cash flow statement. IPSAS 3 is for accounting policies, changes in accounting estimates and errors. This is being taken by IAS 8. We have IPSAS 4, which talks about effects of changes in foreign exchange rates. Here is IAS 21. We have IPSAS 5, which talks about borrowing costs. Here is IAS 23. We have IPSAS 6, which talks about consolidated and separate financial statements. Here is IAS 27. IPSAS 7 talks about investments in associates. Here is IAS 28. IPSAS 8, interest in joint ventures. Here is IAS 31. IPSAS 9, which is revenue from exchange transaction. This is IAS 18. It's no more IAS 18, it's IFRS 15. IPSAS 10, which is financial reporting in hyperinflationary economies. This is IAS 29. We have IPSAS 11, which is construction contracts, which is IAS 11. We have IPSAS 12, which is inventories, also IAS 2. IPSAS 13, leases. This is IAS 17. It's no more IAS 17, it's IFRS 16. We have IPSAS 14, events after reporting, IAS 10. IPSAS 15, financial instruments disclosure is IPSAS. So this is supposed to be IFRS 9. IFRS 9, disclosure of financial instruments. We have IPSAS 16, investment property, which is also equivalent to IAS 40. We have IPSAS 17, property, plant, and equipment, which is IAS 16. IPSAS 18, which is segment reporting, which is IAS 14. IPSAS 19, which is provisions, contingent liabilities, and contingency assets, IAS 37. So when you go through the entire of this, it will give us, it's just the standard that will guide us in the preparation of these financial statements. Please, any question?
So please, at the end, I've seen the RPG. This was the meaning of the RPG.
Please come again.
At the end of the IPSAS pronouncement, I could see RPG 1, RPG 2, RPG 3.
It's a new standard that has come. You realize that currently people are trying to go into the environment. That is the sustainability side of the environment. So the public sector is also interested in it. The public sector is also interested in it. And currently, we have standards that accounting standards that are into it. So the RPG is usually what we call the recommended practice guidelines. Recommended practice guidelines, and usually they are non-authoritative voluntary guidance issued by the International Accounting or International Public Sector Accounting Standard Board. Usually they use it to promote good governance, good practices, and it ensures transparency as well as for offering advice long term. So these ones, they are not something that they are mandated to follow, but they have established to guide them in the reporting of the standards. Like the IPSAS 40, IPSAS 1 to IPSAS 40 are all part of the actual standards that they have established. By these ones, which is the RPG, which is the recommended practice guidelines. So it's like a recommendation that they have made that you can use it or you can decide not to use it. The IAS people haven't developed some yet now. That's why you can see not attached to it. Please, is your question answered?
Yes, please.
All right. Now, let's look at budgeting. Let's look at budgeting. Let's look at budgeting. Since we are all using public funds, it's always advisable or it's always right for us to make estimates and budgets towards it before we use. If we don't do it, we are going to just spend our money without taking notice of it. So the same thing applies in public sector. The public sector have missions which define the reasons for their existence. So we've talked about some of the objectives of public sector, and sometimes they usually need the budget to control or to serve as a control tool that can enable managers of organizations to allocate scarce resources and ensure its judicious application. So if we don't do budgets, these people who are responsible for the public funds will just use the funds anyhow, which is going to affect us. So these budgets will serve as a control tool that will enable managers of organizations, that is the public sector, to allocate scarce resources and ensure that it's used judiciously. Now, the preparation of budget is the responsibility. There is preparation of the public. The national budget is the responsibility of the Minister of Finance. However, the minister is usually assisted by the Director of Budget, who is responsible. Hello. It seems someone wants to talk. Okay. So the Minister of Finance is responsible for the preparation of the budget. Usually, he's been assisted by the Director of Budget, who is responsible for the Central Budget Agency. The responsibility of these state officers and agencies with respect to the preparation of budgets and the states will be discussed in subsequent sessions. Now, let's look at the future of public sector budgets, the future of budget. One key feature of a budget is that it must have an objective. That is the purpose for which the budget is being prepared. 2, the budget must have a period. Period that the budget will cover. Budget presentation also, that is the public sector budget may be prepared based on sectors within the public sector, which are then consolidated into the main budget. So we have to also, the budget must also consider the sectors that you are preparing the budget for. Whether it's for the MMDAs or the MMDAs, whether it's for the SRAJ or it's for all covered entities. Then it must have a supplementary or review budget. So you can't draw budget and make it fixed. It must also come with some supplementary budget. That is when you realize that what you estimated is way lower than what is actually happening in the market or in the then public involvement. When they are preparing budgets, you must involve the public because you are using their funds in spending. So you have to involve them. You ask them what they want to be added, to the budget and other stuff. Then we have budget regulations. Budget must also be regulated. These are the main features of budgets. Now let's look at some of the benefits of public sector budgeting. It's only through budgets that they usually communicate government policies and programs. They realize that when Dr. Atuforsen, Honorable Dr. Atuforsen went to Parliament to read budget, you realize that was when we realized or we saw some of the policies the government has put in place. So budget serves as a form of a tool that the government communicates these policies and programs to the public. It also serves as a planning tool for government policies and programs. It also ensures allocation of scarce resources, ensures accountability and transparency for controlling of cost purpose. It's also a basis for performance measurement. If at the end of the day we prepare your budget and say you are going to generate a revenue of 500,000 Ghana cedis, this 500,000 Ghana cedis that you stated that you are going to generate, at the end of the period, you try to confirm whether you were able to achieve the revenue that you said you were going to achieve. So we compare that to the budget. If there are any discrepancies, then we try to work on how or why we couldn't achieve the budget, or why we didn't achieve the budget that we stated. Then motivation. It also serves as a motivation and fulfilling relevant regulations. We are mandated, according to the Constitution, Minister of Finance is mandated to present budget to the government or to the public. Send the budget to Parliament, approve it, start before funds can be utilized. So when they prepare budget, they prepare it by fulfilling some relevant regulations. Now, let's look at the approaches in budget. The approaches, that is how budget is being prepared. Approaches in budgeting. Approaches in budgeting. So you can prepare budgets based on line item budgeting, program-based budgeting. The formats of budgets may be line item or program-based budgeting, while the approaches may be incremental, zero-based, performance-based, and activity-based. Now let's look at the first two formats. That is the line budget, line item budget. A line or a budget prepared by grouping individual financial statement items by cost center or departments is what we consider as a line budget, line item budget. In the process of this preparation, organizations have identified the various sources of revenue to fund the various expenditure sources for the organization without clustering these revenue sources and expenditures according to activities or programs. Once these revenue and expenditure sources are identified, they are used consistently. So line item budgets are mostly prepared on incremental basis. Line item budgets are usually prepared on incremental basis. You will understand what incremental basis when we are done with this section. Let's consider an example of a line budget. So in the budget, the government agency considered this expenditure line to include compensation to employees or compensation for employees, that is salaries that they pay to employees, goods and services and assets. These are the three line items that they have. The budgets are prepared based on these expenditure lines: compensation, goods and services and assets. Here. This is what we call the line item. Compensation will be here. Then under goods and services, they list all the goods and services that you know: traveling and transport, utility services, telephone services, stationery, maintenance of vehicles, maintenance of capital assets, staff training and development. So all these will fall under the goods and services. They need 21,000 for it. Then assets was land and building, they need 34,000. So they sum everything up, and this will be the expenditure. So they are saying that the example of line item budget for KKBA District Assembly. These are some of the advantages of the line budget. Relatively easy to prepare, yes. If you know you are going to pay school fees, if I tell you to prepare budget for the school that you are attending right now, you can get amount spent on school fees, amount spent on books, amount spent on transportation. To be easy, you just sum up all the items that you spent on school fees, sum them all up and put it under maybe school fees, all amount that you have spent on buying course materials. You also sum them up there. All amount that you spent on transportation, also you sum them up and add it there. These are all, it is very easy to prepare when you compare it to other forms of budgeting. It's easy to justify budgets because it is mostly based on previous year's transaction. So maybe last year you paid school fees of 5,000. You know this year it's likely you pay something above 5,000. Identification of revenue expenditure sources. It's easy for you to identify the source of the revenue as well as the source of the expenditure. control over income and expenditure. When you do the line budget, you are able to control your income and expenditure. Now let's look at the disadvantage. It is difficult to assess budget performance. You can't assess budget performance. Because you didn't put them under the programs. You didn't put them under any projects. You just said that, oh, we are going to need 50,000 cities to pay employees. For all you know, some of the programs or some of the districts, some of the MMDAs, for them, they are spending too much. So you might not be able to compare one MMDA's performance against the other. So it's difficult for you to assess the budget performance. It's also possible for possible inefficiencies when prepared on incremental basis. So incremental basis, let me use this opportunity to explain it to you. It's where you base your current estimates on previous year's estimates. So for instance, this year you are spending 500 cedis on transport. You say that, oh, since I spent 500 cedis this year, next year, let me just consider an increment of 5% or 10%. Let's say 10% increment on transportation. So you apply 10% on 500 cedis, you get 50 cedis. You add it back to the 500 cedis, you get 550 cedis. So in your budget, you say that next year, 2027, you are going to spend 550 cedis on transport. What if fuel comes down? What if, like as we are experiencing now, you realize that the estimation that you made based on past events, the future also will come with its own settings, which will render your value or the estimates that you gave poor. So usually it comes with inefficiencies. Also, suboptimal spending. Managers may spend more amount. They spend amounts in budgets when they could have been saved for fear of having their budgets reduced for subsequent years. So because this line item is usually based on previous years, if we gave you 500 cedis to spend and you spent only 250, people will force to spend and balance the remaining 250 because they are scared that if they tell us that they spent only 250 next year in our budget, we rather give them 250 instead of 500. So they will force themselves to spend their budgets. Now let's look at the other one, which is the activity-based budgeting. And this one, they prepare the budget based on the activities that is going to take place. So it is a budgeting technique where individual activities within the organization are assessed in terms of their contributions to the achievement of the organizational objective. So they will take this activity. Oh, we have to do maybe Six March celebration. We have to celebrate AHU. We have to celebrate Republic Day. We have to do this. We have to do that. We have to do this. So they will prepare the budget for 6 March. They will prepare the budget for AHU Day. They will prepare the budget for Republic Day. They will prepare the budget for all days, all activities that they will need to do or undertake. They will prepare budget for it. Then they sum it up, or they will prepare it on the basis of the activity. So 6 March, you will need 50,000 Ghana cedis. This, you will need 500,000. Republic Day, you will need this amount. That is how the activity-based budget is being done. And before they will add it, they will try to analyze its inclusion and exclusion. And the advantage of the activity-based is that it enables controls to be exercised at the exact unit that actually incurred the cost. So you realize that the activity and the associated are placed directly under the responsibility of the unit. So the activity, if this unit is responsible for the activity, it will place under it. So it will enable us to control all the expenses or how they are using our money. The ABP, that is activity-based budget, also ensures efficiency because justification should be offered before you allow you to include it. Justification has to be offered before they will allow you to incur. And it is useful to organizations that want to use low-cost leadership strategy to achieve competitive advantage. That is some of the advantages of activity-based budgeting. Disadvantages. It is expensive to prepare activity-based budget because it consumes a lot of time, requires resources to analyze costs into activities. You need a lot of time because you have to take every activity, break it down before you can add it to the budget. It is a complex budget. It is a complex budget which makes preparation and administration also difficult. Now let's look at the program-based budget. That one also is being prepared, it's like the activity-based, but this one is being based on the programs that we are doing. So the budgets are prepared from the point of view of specific programs that the organization or its units plans to undertake in a specific period and not on the various expenditure lines. So it's not on the various expenditure lines, but the program. So each program would contain specific line items that its purpose to generate revenue from or spend on. When the budgets are eventually approved, appropriation is made to specific line items in the programs. In Ghana, the program-based budget was introduced in 2014 after it was successfully piloted the previous year. The PPB replaced the activity-based budgeting approach, which had been in force since 1998. A well-functioning MTF, medium-term expenditure fund, was thought to be better associated with performance-based, such as the PPB, even though MTF could work with any budgeting approach. So they prepare budget on the basis of the Ministry of Finance, the Ministry of Health, the Ministry of this, MMDAs. So they prepare it based on the various. They prepare it based on the various. They prepare it based on the activity, based on the programs that they undertake. An example of a program-based budget shown below. There is a program-based budget that they prepared in 2018. So programs. So they have the Commission on Human Rights and Administrative Justice. And they have the Management and Administration. They have Promote and Protect Fundamental Rights. So this is how they did it. So you realize that it was on the program line. The program will be there. Then all expenditure and funds that will come in will fall under it. And there is the advantage. Any question?
Yes, sir.
Julius, your hand is up. Kindly ask. Can you talk?
Yes, sir. Please, I want to find out the budget. Does it really follow a specific pattern when you are preparing it?
So according to when we get there, you know how it's being prepared. So when the Minister of Finance is preparing budget, he can go for any of these, but he just have to give justification. You realize that the line up, the activity approach, as I read, you realize that it has been replaced with the program line, the program based. It's program based because before the budget comes to Parliament, when you're doing the steps in preparing budget, before the budget comes to Parliament, the minister or the various budget officer in the various ministries are to prepare their own budget, bring it to the Minister of Finance. So it's like the bottom-up approach, bottom-top approach, where they will take the budget from the bottom line, then they will bring it up and consolidate it at the ministry. So if the Ministry of Health will send its budget to go there, so the budget, the programs, all the revenue that will come in and the expenditure that they are going to incur will be under the Ministry of Health. So currently, mostly they present it in the program-based way. The program based budgeting. That is just because how they take the budget details from the lower level to the upper level. So their presentation is mostly to be like this. Along the line also, they can decide to go for the activity base or the line base, any way that they. But currently, we are using the chart of accounts. We have stipulated, they are giving us the 7 components of expenditure, how you have to state the expenditure. You must see compensation, you must see goods and services, you must talk about interest expense, subsidies, you must talk about consumption of capital. So when you get there, you realize that when they are doing the presentation now, they use the tax revenue, non-tax revenue, other revenue, gifts. That is how they do the presentation.
All right, thank you, sir. So I asked this. So let's say for examination purposes, you see where we have the statement of financial, or let's say the statement of financial positions, where you have patterns where you have to follow. That's why I have to ask if this also falls with the same category as if you are being asked to prepare a statement of financial position.
You
Thank you very
don't
much.
follow any. When you are preparing the budget, they will give you. They will give it to you. So when.
All right, thank you, sir.
Okay, Stephen, your hand is up.
Yes, sir. Please, can you please brief me about the difference between the activity-based budget and the program-based budget? Because I'm getting confused here, please.
So the activity
The
under one
differences.
program,
Yeah.
under one program, they can have more than one activity undergoing. The program is like the various ministries and the MMDs. So for instance, Ministry of Health can have, let's take Ministry of Education. Ministry of Education will be a program, but under it, they can have the free education, they can have school feeding program, they can have the school feeding as an activity under the ministry. So if they are preparing the budget on the basis of activity, you realize that under Ministry of Finance, they will have 2 activity-based budgets.
Okay.
I get the idea. But
Yes,
if they are
please.
preparing it on the program base, the Ministry of Education will bring its budget, and it will consider or it will include all activities that will take care or that will be taken under the ministry.
Oh, okay. Okay. Thank you, sir.
You're welcome. Now, these are the advantages. It's easy to prioritize programs and concentrate on programs that are found to be viable. So all these programs also comes with their income, like their inflows also. So if they realize that this program will bring in more inflows, then they will go for it. It enables organization to link budget inputs with outputs. Yes, because now you know what you are sending to the program and how much you're going to get in return. For easy identification of budget control targets, you can easily control it. Facilitates management of future service delivery as well. When we look at the disadvantage, it will take time. Incorrect programs based on budgets lead to appropriate budget decisions such as wrong allocation of scarce resources. So sometimes also you realize that the program might not be fetching us anything, but because we are doing it on a program base, we have to say just send funds to the program, which will not yield us anything positive. Now let's look at the next one, which is the zero-based budgeting. Zero-based budgeting is where you are prepared, the approach of you preparing budgets without any basis. So it's like I ask you prepare budget for me. You start from scratch. You take every item and you attribute funds to it. That is why zero base. So it has no basis. This means that all activities are assessed to offer a justification for their inclusion before they are included in the current budget. So it's not that we are going to base on previous years. Maybe last year we paid employees 50,000. So this year there is a possibility that it will increase. So let's assume an increment of 10%. They will add it. No. With zero base, you start from afresh. How many employees do we have? 10. And if we have 10 employees this year, we are going to pay them this amount. Just multiply it. You multiply it and put the figure there. So you start from scratch. You do the analysis from scratch. That is no basis. You don't have any basis. You just do it from scratch. And these are some of the advantages. It leads to budget accuracy and efficiency since it eliminates redundant activities of previous year. So sometimes there will be an activity in last year's budget which was effective. By this year, it might not be effective. So if you are doing incremental, there is a possibility of you repeating it in the current year. But with zero-based budget, before that activity can appear, you usually analyze and assess its inclusion. Assess its inclusion. It also facilitates goal congruence through coordination and communication of various units, because before you bring an item, you must talk to them. Have a discussion with them. Tell them why this item is necessary to be added and why it is not necessary to be added. Variants are likely not to be too wide. Since you did all the analysis that needed to be done, since you did all the necessary analysis that needs to be done, you might not necessarily need a lot of variances because you adjusted for it before adding it up. Budget preparers and implementers are better motivated because their decision creates the budget, and the budget also enables organizations to constantly assess how well their budget supports the achievement. These are the disadvantages. It's expensive in terms of time because you have to ask people, go around, do this. It's very expensive. Time, it takes time. It requires adequate manpower. Yes, energy is also required before you can also do that. Now, let's look at the incremental budget, which happens to be the last approach, budgeting approach. Incremental budget, as I've always been saying, is where you base your current estimates based on previous budgets. So last year you spent 500 cedis. Let's assume a 50% increment. You are doing incremental budget. So in incremental budgeting, previous periods budgets inform the preparation of the current year's budget by adjusting the base year by an expected variable in the current year. The preparation of the budget is based on the premise that previous year's activities would repeat in the current year, and the magnitude of the increase is based on the size of the previous years. The size of the current year's budget or the current year's increase is influenced largely by inflation and changes in activity levels. So specific income and expenditure lines are adjusted by the change magnitude. For instance, we assume that the information in the line item budget above would increase by 5% for simplicity. The current year's budget will look as follows. So this is how it will look. Last year's budget, compensation was 50,000. Then we are assuming that there will be a 5% increment. So they will multiply this 50,000 by 5% and get this one as the current one. Traveling expenses was 10,000. Traveling and transport was 10,000. 5% of this is 500. We add it back to this to get 10,500. This was 5,000 last year. Current year, we will do this. So that is how the incremental budget is being done. That is you based on the previous budget and you multiply the current one. It is simple and less expensive to prepare because it is based on current accruals. Simple to prepare and less expensive. It improves the transparency of since budget figures can easily be verified by applying the expected change on the base. It ensures consistency in operating activity, which facilitates comparability. It also funding for medium-term and long-term programs could also be secured and easily monitored. Previous years' inefficiencies, these are some of the disadvantages. Previous years' inefficiency are automatically carried to subsequent years. It is less motivating since there are minimal inputs from budget preparers and implementers. It is easy to build budgetary slack into the future or into the budget because some budgets last year were not important. Something that was last year important might not be important this year. It can also encourage overspending since previous year's budget may not be needed in the current year automatically wrote into the current year. So these are some of the disadvantages of the incremental budgeting. Kindly ask.
Yes,
Any
sir.
question? Kindly ask.
Please, does it mean that if you are preparing an incremental budget, whatever you have done last year is supposed to be repeated?
Yes, that is the explanation to it. So what happened last year, you just have to add a percentage increment, make provision for anything or the possibility of it being increased. That is what it means.
Okay. Okay. Thank you, sir.
All right. Now let's look at the regulatory framework. That is, when it comes to budgets in Ghana, what are the things that governs its preparation? So when it comes to preparation of budget, these are the laws that governs the preparation of budget. The first one is the provision on budgets. That is the 1992 Constitution. That governs the preparation of the budget. And it's in the Constitution. It requires the president, according to the Constitution. The 1992 Constitution requires the president to present the budget to Parliament at least a month before the end of the financial year. That is what the president is supposed to do, but he can't do it by himself. He do it through the Minister of Finance. The Constitution recognizes the importance of planning for financial receipts and expenditure of the country. Based on the Constitution, timing of national budget should be an essence of national economic managers, as it is mandatory for budgets to be ready at least 1 month before the end of the year. This notwithstanding, in election years, budgets for the ensuing year could be prepared in those years because the uncertainty in the continuity of the certain government But even in those years, the sitting government is expected to prepare a 3-month projection for ensuring year of parliamentary approval in order not to bring government machinery to a halt. So what this one is trying to say is that during election, you realize that in Ghana we do elections in December. And if there is going to be a change in government, the sitting government is expected to prepare budget for 3 months into the following year. So that when there is change of government, the new government that comes in can use that budget in its operation for the first 3 months before everything is settled down. This 3-year month projection must, however, cover the basic revenue and the cost item that will keep government machinery running and not cover new projects and programs. So you realize that when the previous administration was leaving government, they wanted to do some big projects like investing in or buying cruise ship. But the minority then fought against it. That they are leaving office and they won't accept them or they won't allow them to add such capital expenditure to the government. So that is the provision the Constitution gives to the president. We have provision on budgeting. In the PFM, and the director of budget will be responsible for the preparation of the annual estimates and the medium-term expenditure framework within the constraints specified by the government fiscal strategy document. So every year when you are preparing budget, as I said, that the individuals' programs or ministries will prepare their budget. Before they will prepare it, the Minister of Finance or the government will tell them their or his medium-term goals or physical strategy. You will hand it over to them. You will tell them that this is what I want to achieve. So based on what they want to achieve, they will prepare their budgets based on it. So usually, the preparation of the mid-year review and the quarterly budget execution reports under the section 29 and 34. They advise the minister through the chief director on all matters related to annual budgets, supplementary budgets, and the medium-term expenditure. They advise the chief executive or the chief director on matters related to classification of the budget and perform any functions assigned by the chief director. When it comes to fiscal policy principles also, that is the monetary and fiscal policy, they play also key roles in the socio-economic development for every country. So you just have to just read, it's very self-explanatory. They are the principal accounts holder and principal spending. Just learn and keep like 3 points in it. That is the only thing that makes public sector difficult. The reading is so much, but usually in exams, in none of them, you'll get a full question, which is compulsory. Then you will get theory. I think for theory, you choose 2. Each will carry 10 marks. Each will carry 10 marks. We have the principles on formulation and implementation of fiscal policies also. And the principles, one of them is that it's sufficient revenue mobilization to finance government programs. So there must be sufficient revenue mobilization. There must also be maintenance of prudence and sustainable levels of public debt. They must ensure that fiscal balance, when calculated without petroleum revenue, is maintained. Management of fiscal risk, achieving efficiency and effectiveness. When you take the fiscal strategy document, that is a section 14 to 18 also, they stipulate all these in there. When it comes to the IPSAS, which is also a regulatory framework, when it comes to the IPSAS, It also has a portion that will also stipulate what we are supposed to do in preparation. And it includes the IPSAS 24. That is a presentation of budget information in the financial statement. And its effective period was 2009. This is the objective of the IPSAS 24. That is comparison of budget amount and the actual amount arising from the execution of the budget. Then the scope is an entity that prepares and presents financial statements under the accrual basis of accounting shall apply this standard. So this is IPSAS 24. It just gives you an idea of what you need to do under the preparation of the budget. So this is the summary of it. An entity shall present comparison of budget and actuals amount as additional budget columns in the primary financial statement, only where the financial statements and budgets are prepared on a comparable basis. So when you prepare your budget, it's always advisable that you add the actuals and the estimates as a comparison so that you can calculate the variances to see whether you did well, it was favorable or not favorable. Whether it was favorable or not favorable. Whether it is favorable or not favorable. So that is a summary of it. So just get time and just read that. Now, there is the content of the national budget. Let's look at this. Let's look at the content of the national budget. So when you take the national budget, there is the budget that they presented recently. Was it recently? The mid-year budget that they read, or the end of year budget that they read in December? The end of year budget that they prepared in December. That is the national budget. Let's look at what is inside it. So the national budget is a consolidation of the budgets for the central government and the budget for the local government. Budgets prepared for the state could be balanced or deficit budgets. Balanced budget is where you compare your revenue to expenditure. There is no difference. A deficit budget is where your expenditure will be more than your revenue. The surplus budget is where your revenue will be more than your expenditure. That is how budget is being prepared. And when we look at the content of the national budget, the first thing that you see is the budget theme. It's a budget theme. That is the theme on the budget. And usually the budget theme covers the objective of the budget. You realize that when we're doing some of the features or characteristics of a budget, we talked about the budget must have an objective. So similar to the national budget also, it also has an objective, and it's usually stated in front of the budget or in front of the document. So the budget theme covers the objective of the budget for the ensuing year, which sums up the main goal of the state for the period. It also reflects the objective of the state, which is the target that the budget for the year seeks to achieve at the end of the period. The Constitution of Ghana gives a framework for setting the theme of the budget, and this is indicated in the article 36 of the chapter 6. So these are some of the objectives that we had from 2012 to 2016 during Mohammed's tenure. The state shall take all necessary actions to ensure that the national economy is managed in such a manner as to maximize the rate of economic development and to secure maximum welfare, freedom, and happiness of every person in Ghana. and to provide adequate means of livelihood and sustainable and suitable employment and public assistance to the needy. That is the Constitution of Ghana. This is what the Constitution of Ghana is talking about. That is like the overall objective of Ghana, what Ghana needs to do or what Ghana needs to achieve. Following this general framework, that is the framework that we have. Past and present governments have pursued the goals that will lead to the achievement of the constitutional objective. So this is objective Ghana needs to achieve. This is the objective Ghana needs to achieve. And based on this overall constitutional goal, governments have come up in order to achieve this. So for instance, 2012, the goal was that infrastructural development and accelerated growth and job creation. That was the goal that was the objective for the 2012 budget. 2013 was sustaining confidence in the Ghanaian economy. 2014, it was rising to the challenge, realigning the budget to meet key national priorities. 2015 was transformational agenda, securing the bright medium-term prospects of the economy. The objective for 2016 budget was consolidating progress towards a brighter medium term. These were the objectives of the state budget. These were the objectives of the budget. Now let's look at the objectives for the state in 2020 from 2017 to date. That is Akufo-Addo's time. We have 2017 sowing the seeds for growth and jobs. 2018 was putting Ghana back to work. These were all the objectives of the various budgets that they have read. After the theme of the budget, the next content in the budget is the introduction. They will give us some of the introduction of the budget that they are going to read, which will tell us how the budget will solve the sustainable development goal or the specific goals that they can solve, as well as the United Nations and 15 specific objectives attached, which are expected to be achieved by 2030. Then from there, they have the budget assumptions. So they give us the underlying assumptions that they use in the preparation of the budget. So they will say that they assume that overall GDP growth is 6.8%, non-oil growth is this, end of year. So it will give us all these assumptions. That was what 2018 budget gave us. Then when they are done, they will talk about the fiscal policy measures. When you say fiscal policy, it's just about how the government generates money and how they spend it. It's like government expenditure or how they spend this. That is how fiscal policies are. So here in 2018, they said that they will make concrete changes in the tax policies. That is revenue generation. They also talked about review the suspense regime to improve tax compliance, implement this, extend requirement to producing tax clearance, improve property rates collection, partially monetization of Ghana's gold royalties. So these were some of the fiscal policies that they gave to us in 2018 government budgets. When it comes to the measures over expenditure, these were what they also said about their expenditures. Comprehensive review of the pay system. That is where they started talking about dead names or ghost names in the pay rules. Rationalization and standardization of remuneration of chief executives. They said all executives in Ghana are going to receive the same amount. They also talked about general policy measures on payroll. All these were some of the fiscal policies that they stated in the budget in relation to the 2018 budget, which relates to their fiscal policies, particularly on expenditure. So when they are done with it, they will also talk about the macroeconomic performance. They will talk about the macroeconomic performance. They will talk about the macroeconomic performance. And they will have the policy initiatives, everything that they have talked about. They will talk about the taxes that they have abolished in 2017. They said they have abolished excise duty on petroleum, import duty on specified vehicle spare parts, that is percentage of VAT on real estate. They said they have abolished all these taxes. And also, Parliament passed a law establishing the Zongo Development Fund. And they also talked about the one district, one factory policy. They launched it on the 25th August 2017, and government completed technical, financial, and commercial viability analysis of 462 proposals out of 191 covering 102 districts were selected for implementation. This is envisaged to generate about 250,000 direct and indirect jobs. So this is what the Akufo-Addo told us in 2017 in the budget, that he was going to build one district, one factory, and it was 462 proposals that they made, out of which 191 covering 102 districts were selected for implementation. When it comes to 2018 also, the government promised to implement the following measures. He said he will reduce electricity tariffs. He said he will improve revenue from lotteries. He also said he will embark on an MDA solar rooftop programs. He also said he will develop postal codes. We do this, we do that, a lot of promises here. We don't know whether he did or he didn't do all. There were budgets that they just put them inside. 2018, that was it. So what we just did are those are the items that you see in the content of a budget. Now, let's look at the budgeting in the central government. The budgeting in the central government, that is what the Minister of Finance does. And you look at the budget cycle. The budget cycle. In public sector or in the central government, the budget cycle has 4 stages. The budget cycle has 4 stages. This can be a theory question that will come, and they will ask you to choose from it. So the first stage is the preparation stage. That is where they start preparing, gather all data from the ministries, the metropolises, the districts, the local governments, all of them. They just gather the information from them. They prepare it, then they will approve it. After approval, then they will start with the execution, and after execution, they also monitor. After monitoring, they audit and also do what you call the evaluation. So when they ask you for the budget cycle, tell them that there are 4 main budget cycles that we have. When it comes to the budget formulation, this is the stage at which the budget is created. It begins with the public expenditure survey. So they will do the public expenditure survey where they will go around asking people on the expenditure on government resources and future plans. And this objective of the public expenditure survey is to plan government programs within available resources, ensure efficient and effective rationalization of resources, coordination of various sectors and their expenditure. They also determine the level of expenditure to be allocated to various sectors. They also the budget committee also, which is the head of department, head of budget management officer, they also have the following responsibilities. They review and formulate the strategic plan. They review the revenue collection activities. They allocate the resources based on objective. They coordinate and consolidate budgets. They monitor and evaluate budget performance. They also report. And under the budget planning, these are the steps that follows. There are 5 steps that falls under the budget planning. That is the first stage. They will first issue a policy paper or budget framework paper. So I told you that before every budget will be prepared, the central government must send what they want to achieve within the year, or some of their policies that they want to implement within the year. They will send it to the various covered entities, their budget officers, to look at to it. So when they are preparing their budget, they will center it on the policy or the issue paper that the government has sent. So that is, this is developed by the Central Budget Agency under the MOF, Ministry of Finance, not later than 8 months before the end of each year. And it contains draft, preliminary constraints, revenue and expenditure projections for the year. It should reflect the nation's development plan and PES, that is the public expenditure survey, what they got when they went around to check, and it's submitted to cabinet for discussion. So that is what the issue paper or issue policy paper or budget framework paper talks about. Then the step 2 is that they will send that document, the issue paper, to cabinet. Cabinet will do provisional discussion on that policy document that they've sent to. The major contents, such as the expenditure and the new taxes that they have brought, Parliament will sit on it and discuss. Cabinet communicates its position to CBA. That is the CBA. That is a central budget agency. Then when they are done, they will issue what we call the budget circular. The budget circular gives guidelines for spending or organization to follow in making their spending plans and requests. And this one should come not later than 6 months before the end of the year. Then you come to the content. When you take the content of the budget circular, it gives us timetable, it gives us commentary on the past economic condition, it gives us projected growth rates, it gives us macroeconomic variables, it gives us specification of sectorial and ministerial constraints. Then the step 4, they issue them budget instructions. The Minister of Finance then issued the additional guidelines and directives to the MMDAs, that is their HODs, on how to carry out the budget preparation. Then when you take the content of the budget instruction, it forms the budgetary documents and statements, classification of budgetary transactions, information to be submitted in support of the budgetary proposal, costing of activities, procedures to follow by budget committee. So the Ministry of Finance will issue these budget instructions. Then from there, they will do the preparation and submission of budget proposal. So revenue budgets, tax revenue, non-tax revenue, and grants loans. Expenditure budgets, that is considered microeconomic government, is perform internal, this they will start preparing it. So that is the first stage of the budget process. That is a planning, and we have 5 steps that falls under the planning. When they are done, they move on to the authorization and approval stage of the budget, and is at the central budget process. Now, authorization generally occurs at the departmental and ministerial levels, whereas approval occurs at the cabinet and parliamentary level. So when it comes to authorization, the various departments and the ministries, they will authorize the budget. So when the authorization is being approved, then they will send it to cabinet for cabinet to approve. So usually they will invite individuals to come around to justify the inclusion of the various items in the budget, especially when they realize that it demands a lot. So under the authorization, you have step 6, where they will examine the budget proposal, and it usually happens at the CBA. The step 7 will come in where they will do the budget here, where I said they will call people to come and defend why this item was added. The step 8 is where cabinet approves. They will approve it. Then step 9 is where the preparation of the finance and the appropriation bills. Know that the finance bill is the bill that they send to Parliament to collect revenue. And when it is approved, it becomes Finance Act. The appropriation bill is the bill that they send to Parliament for expenditure or for money to be spent. The appropriation act is when Parliament approves the bill. Then when it comes to revenue collection, the step 10 is the revenue collection. The passage of finance bill under the certificate of agency for revenue collection begins the first day. Then they will do the step 11 where the examination and approval of the expenditure estimates. Then when they are done, they will come to the next step, which is the implementation and execution stage, which is the third step. And at it, we have the step 12, which talks about provisional appropriation act, when they realize that what they included in the budget is way below what is actually happening. They will do provisional warrants to authorize spending. The step 13 is where they release funds to meet the expenditure. Then they have the final stage, which is the audit and the evaluation stage. This is the stage where the budget implementation is subject to constant review in order to ensure that spending is covered by the budget and amount spent does not go beyond what was budgeted. So they have 13 steps in all under the preparation of budget by the central government. Any question? Any question? Any question? Next week we are going to do more of calculation. We are going to do more of calculation because next week is where we start. We will also talk about this. We've done the budgeting at the central level. We look at the budgeting in the local government. When we are done, we use the first 15 or 30 minutes for it. When we are done, then we actually move on to the financial reporting in the central government. We look at the financial reporting. That one is also, we do reading for the first three units. I think even next week everything is on. Okay, yes. So section 4, we look at some of the calculations, how to prepare these budgets. We look at all these and the items that falls under it. All right. If there is no question, I think we'll call it a day since it's 11:30 now. See you next week.
See you.
Thank you very much.
You're welcome, please.
Oh, thank you, sir.
You're welcome.
Thank you, success.
You're welcome, Agnes.
Thank you, sir.
You're welcome, Atiku. You know, so
Thank you very much, sir.
yeah, John, you're welcome.
Thank you very much, sir.
Thank you, sir.
Okay, someone is asking, you're all welcome. Someone is asking whether you can get the WhatsApp page. Do you have the WhatsApp link?
No,
Have
please.
we created a WhatsApp page for the public sector?
No, please.
No.
Can someone dedicate yourself? Please kindly put your number on the comment section so that everyone can contact you, especially various course reps. Or if you're a course rep, kindly, if you're a course rep for each of the centers, kindly just drop your number on the comment section so that we'll give it to you. The person who will dedicate himself to create the WhatsApp page for us. Yeah. Yeah. All right, so I have SCU here. Any other? next week.
Hello. Hello. Why is Sam showing a number? Hello. Please. I'm surprised. You are supposed to do 3 hours. What is going on? Where is the lecturer? Hello. Some of us are we still on here? Hello.